China is being hit hard by U.S. tariffs right now. So news just came out that China's industrial profits plunged 9.1%, the steepest fall in 7 months. We're going to look into it. We're going to look into China. Is there going to be a trade deal between Trump and Xi Jinping? What are American countries doing with China? Are they bringing manufacturing jobs back to America? And what would be the effect of that? So we'll take a look at it. China's May industrial profits slipped back into a sharp decline. Deepening deflationary pressures and a persistent property crisis, according to Reuters, continue to undercut demand and growth in the world's second largest economy. A few signs, including an unexpected pickup in retail sales growth last month, suggested some resilience among households, even though market consensus is that more policy support is required to bolster a fragile economic recovery. As you remember, China and America had a huge tariff war. America imposed tariffs on China, claiming that there were trade deficits and other tactics used that were against the U.S. economy by China. So then China put on reciprocal tariffs back to America's tariffs, and it got up to 125, 130% tariffs on both sides. Then they brought it back down. They brought the temperature back down in the room, and the tariffs are still at a high amount. And it's really affecting China because, as you know, that China makes more products for other countries than they make for themselves. So their manufacturing is geared to exports, and their largest customer, or their second largest, their largest customer is the United States. So the United States has put these tariffs on China so that American companies don't want to have their products manufactured in China. So that really hurts manufacturing businesses within China. Profits at China's industrial firms fell 9.1% in May from a year earlier, snapping a 2-month growth streak, National Bureau of Statistics data showed on Friday. The profit decline was due to insufficient effective demand, declining prices of industrial products, and fluctuations in short-term factors. The insufficient effective demand is referring to demand from other countries to create their products within China. Industrial profits slid 1.1% in the first 5 months of 2025 from the same period last year. This compares with a 1.4% increase in the January-April period. China's factory gate deflation deepened to its worst level in almost 2 years last month, while consumer prices extended declines. Prices took a hit from U.S. President Donald Trump's tariffs on commodities, while domestic price wars hit gross margins. So tariffs seem to be having a huge effect on China and Chinese manufacturing. So people are looking, what is China going to do? Well, it seems that according to President Trump, there is a possible trade deal with China.
Making deals with other countries. Remember a few months ago, the press was saying, do you really have anybody of any interest? Well, we just signed with China yesterday, right? Just signed with China. We have everybody. We're not going to make deals with everybody. Some we're just going to send them a letter, say, thank you very much. You're going to pay 25, 35, 45%.
All right. So then there's a possible deal with China and the U.S. As you know, with ceasefires or with trade deals, they are very volatile and not set in firm. So you don't know if it's done until it's actually done. So we're going to see if the trade deal holds up. If it doesn't hold up, it'd be great if it did. It'd be great for both countries. So what are U.S. companies doing? U.S. companies are definitely getting pressured by the administration, by the U.S. administration, to move their manufacturing jobs from China to America. The argument from President Trump is that if we'll bring jobs back to America, it'll be better for the economy. It'll raise the overall living wage of the people in America. The argument against it is that if you bring jobs back to America, wages are going to be so high that it's going to increase the product price of manufactured products. So it's not really going to be any sort of living wage increase because prices of products will be expensive, more expensive than they made in China. So it's yet to be seen what will be the actual effect, but it seems that U.S. companies are seeming to feel the pressure from the administration to bring jobs back to America. So GE Appliances, General Electric, created by Thomas Edison, moved some production from China to Kentucky with a $490 million investment. GE said they are going to invest $500 million to jobs inside of Kentucky in Louisville. It's actually where I live. not in Louisville, but in Kentucky. GE Appliances announced a nearly $500 million project Thursday that it says will create 800 new jobs and shift production of clothes washers from China to its massive manufacturing complex in Kentucky. We are bringing laundry production to our global headquarters in Louisville because manufacturing in the U.S. is fundamental to our zero-distance business strategy to make appliances as close as possible to our customers and consumers. The announcement comes as President Donald Trump attempts to lure factories back to the United States by imposing import taxes, tariffs on foreign goods. He has slapped 10% tariffs on imports from most countries and put a 30% levies on Chinese goods. As you remember, it used to be 125%. So we're doing a little better. GE Appliances says nearly all the steel used in U.S. manufacturing for its appliances comes from American steel makers. So it seems that companies are coming back to America. They are bringing jobs back. We're going to see the effect. Is it going to increase the overall living standard of American workers and American families? It may not. I would like to see it help America, of course. And we're going to see, will China make a new trade deal with Trump? And then will they set it in firm? And will there be more fair trade practices? Or will it be more separated between the Chinese economy and the American economy? It is yet to be seen. If you'd like to see more of this kind of news, don't forget to like, subscribe, follow. See you next time.